Ladies and gentlemen, how are you tonight? I hope that you're having a great, fantastic time. This is interesting time when it comes to real estate. We are seeing crashes across the market in all kinds of different markets. We're seeing trouble left, right, and center. People are losing their properties. Can you believe in the massive cities down 20%, 30%? We haven't seen anything like this since 2009. So what is happening is very, very interesting to everybody. We're wondering how on earth could this possibly go on? And some of the most interesting things are happening these days. We're going to be making a YouTube video about it later. This is for the Office of the Superintendent of Financial Institutions of Canada, OSFI. So when we look at something like this happens in the markets all the time. The governments are going to be giving direction to the local banks, letting them know which way it's got to go. Like, are we going to have more lending or less lending? Just to put this in perspective, though, what the banks were willing to lend just last year is now 1/3 of what they were lending now. So a year ago, 1% is all the reserves a bank had to hold. Today, they have to hold 3%. What does that mean? That means that they are not lending near as much. They only can lend to 30% of the people that they did last year. So what do you think happens in an instance like that? What happens is now you have to have perfect credit and a lot of money in the bank and an amazing deal even to get a loan, which is crazy. Let's put that in perspective. One of our clients went to the bank and he wanted a $250,000 loan. 250, for those of you who are not in Toronto, an average home here is 1.2 million. So in order to get a $250,000 loan, which is 20% of what you need, the bank wants $1 million of equity. $1 million of collateral for $250,000 loan, which is absolutely crazy. We've never seen that kind of thing before. So before, you used to get 4 or 5 times your salary in interest in a mortgage. Today, we're now getting 1 or 2 times your salary. Here's the crazy part. In order to have $1 million of equity to get a 250 loan, you might be at half your salary. So now instantaneously for you to get $1 million property, now all of a sudden you need to make what, $2-3 million a year? It's absolutely crazy. And so this is the problem that is coming up with people who are trying to sell their homes. The only people that qualify are people who are financially rich. Everybody who sees that the home prices are falling say, this is great for me. I'm getting a great deal. But what you fail to understand is that you are not buying a property in cash. If you are buying a property on a mortgage, like 90% of the people do, your payments are higher now than they were before. It's lost a little bit of money, but the interest rates have gone to the moon compared to where they were. I mean, it doesn't take much to go over 0.25%, right? But it has gone way higher. So your payments are higher. They're not lower. The only person that this does good for is the people who are buying cash. So why do you think big players, BlackRock and so forth, they're sitting on billions of dollars waiting for the market to actually crash? And then what are they going to do? They're going to come in and buy it all up. You think that they're crazy when they're sitting on $60 billion, $80 billion, and they're just sitting there? No problem, guys. Just let it go down the toilet. They're going to come in and buy all these deals. So that's what I'm here for you today. I want to help you guys try to help you survive this crazy real estate market. Please, if you have any questions, please throw them up. If you're on Facebook, if you're on Instagram, if you're on YouTube or TikTok, just put the questions on. I'll see them come up on one of the screens and I'll get back to you. And if you want to know what an instant evaluation of your property, it takes us about 10 seconds. You can put in your postal code and I'll tell you what's happening in your exact postal code. Robbie, it's not the first time. Look back at 2008. So yeah, you're right. This is not the first time that there has been a recession. Absolutely, Robbie, you're right. But very, very different. We're not even on the same planet, how as different that we are. Because back in 2008, we only had a little bit of debt as a country, not a lot. Today, we are at the breaking point with so much debt. We have never had this much debt in any country in history. Number one. Number two, it's the fastest rate hike that we've ever had in history. So we're in a very different situation right now, even though you're right. This is not the first time that we're in a recession. but these recessions are going to be massive and have massive implications. Remember, if you go online and look anywhere you want, when an interest rate goes up, there's a lag effect, 12 to 18 months. So every time that you see online that a interest rate has gone up a little bit, like one thing, the effects of that interest rate hike does not happen for 12 to 18 months. So the very first interest rate that they did back in March or April, we're only halfway through seeing the effects of that one, let alone all the other ones that are going to be happening over the year. 12 to 18 months. Every time there's a new rate hike, it's another 12 to 18 months, keeps getting pushed off into the future. You guys, if you want to know any numbers, you can give me your postal codes if you're in Toronto, and I can give you an idea of what's happening to your home. Listen, the bigger they are, the harder they fall. The properties that are like 5 million, 10 million, they're losing 30%. The guys in cottages are down 30%. They're losing a lot. So the expensive homes dropping like crazy. The entry-level homes are doing really well. So it really depends where you are, right? That's what that you have to look for. Robbie, you're saying yes and right. BlackRock is buying up foreclosures. Now, they are going to always be looking for deals, right? But the difference is that they're going to wait until the real price crashes, and that's not going to happen probably in Q2 or Q3 of next year. Q2 and Q3 next year, you're going to see some real fireworks. Manraj, you're asking a question about L8K. That's where you're looking at. So for L8K, if you want to know, in the past year, it has dropped 15.3%. The average property is $648,000 now in L8K. If you want a more detailed breakdown, you can always send me a message at contact@Rough Team Realty. Absolutely free, doesn't cost you anything. If you guys are on YouTube or Facebook, you can do the same thing. Just give me your postal code and I'll try and help you out. Now, these rates are going to continue going up, continue going higher, and it's going to cause a massive amount of pain. But the banks are being the most honest I have ever seen in my life. I have never seen them be so precise in what they're talking about. And they're telling people, we are absolutely going to keep raising rates. We have to get it down to 2%. Now, will they get it down to 2%? I don't believe them at all. Not even close. Not even close. All right, guys, if you have a postal code, you can give me. I'm a realtor. I work out of Toronto. There's some crazy stuff happening in real estate today. Prices are dropping across the board, but only like the big damage is happening on the expensive homes. You were scammed by Aurora Coins. Is there solutions to get your money? I have no idea who Aurora Coins is. I apologize. Hi, Brenda. How are you? That's why, you guys, I always tell you, if you go to the link in my bio, it's the places that I buy gold and silver from. Those guys I've been using for 20 years and they've never scammed me before. This is why I say you have to use people that you really trust, because there's a lot of bad stuff that's happening in the markets. Brenda, LOB is what you're looking for. LOB is up 22% in the past year, but if we measure from the peak of the pandemic, it's down 50% from the spring. Average price is $996,000 inside of LOB. Chris, you're asking about L6M, and if you guys have any questions about real estate on Facebook or whatever, please shoot it out to me. I'll try and help you out as fast as I can. And if I miss you, I apologize, because there's a lot of questions coming in. L1Z, I'll give you the results for that if you want. L1Z average price dropped from 1.4 in the spring. Now it's down to 917,000, which is the average. Prices are dropping because interest rates. Remember, for every 1% that the interest rate goes up, we lose 10% of the purchasing power on the loan. So let's just say that you had a $2 million property and you were selling it and interest rates went up 2%. Well, actually, in reality, they went up 3%, right? So if they went up 3% on a $2 million home, that is what? 30%. 30% is huge. That's $600,000 down. Of course, we had some inflation, so it brings it up a little bit, but big chunks. Mark Holth. You said I look like him? Thanks, man. I hope that's a good thing. Bhupinder, I'm sorry, I don't have the NN area codes. I don't have that one. Home L4H. I could do that for you too if you want. L4H. Home prices are dropping everywhere, but if there's something that you guys are interested in, you can always reach out to me at contact at Rough Team Realty. Absolutely free, no obligation. If you're looking at L4H, it peaked out at 1.9 million out in February, and that postal code is down to 1.4 million right now is the average price in L4H. Hope you didn't lose too much. T2Z, if you want me to check out that one, I'm happy to do that too. You're seeing Barry down 43%. Barry, 43% sounds like a lot. Now, individual homes for sure, the expensive homes, absolutely, it could be that way. As an average across the whole place, I haven't been seeing that much of a drop, but yes, indeed, massive drops. Also, Barry, we buy obviously for our clients all the time when it comes to purchasing properties, left, right, and center. Okay, like just let's say that we're buying it for them to live in for themselves. We do that, but we don't buy it as investments. Barry hasn't been an investable place. But for L4H, average price right now is 1.4 million, off from 1.6. Again, if you guys are on YouTube or on Facebook, Instagram, if you have any questions, you can fire it my way as well. But guys, the interest rate is going to continue to go up. We're not going to see it go down. And every bank, from the central bank in Europe, the central bank in the United States, the one in Canada, is all saying that these rates are going to stay here for a lot longer than you expect. So what is your plan? If you're hanging on to a very expensive home, the expensive homes are the ones that are going to drop the most. I've been saying it since back in April. If you have an expensive home, you should be like getting out of the way of the truck that's coming down the highway. Get out of the way, let somebody else take the hit on it, and buy entry-level properties, or just stay out of the market. That's fine too. Brent Campbell, what's my advice for a young person looking to become a real estate agent? You should be joining a team, I think, and you should also be educating yourself like crazy. I've been reading a book a week for like 20 years. So my advice is for you to nonstop read, education. But yeah, you can go at it on your own or join a team. I think you should join a team for at least 3 years, because if you don't, you're never going to get the skills, right? Real estate is a funny thing. We lose around 90% of realtors within 2 years because they can't take it. It's way too much pressure. People don't realize that being a good agent, you don't punch in at 8 a.m. and punch out at 6. No. It's 24 hours a day. Every weekend, every night, you wake and you open your eyes, it's like that. So it's very, very tough. You just opened a 5% savings account today. Love it. Hopefully you're going to continue your path to freedom. Well, these home prices are going to continue to crash. If I was going to guess, and I don't know, I don't have a crystal ball, I knew that it would be happening sometime between Q1. I was expecting somewhere between the releasing of Q4 results, which could be February, somewhere between February and let's say like September, October, something like that at the latest. Somewhere in there is, I think, going to be the peak trough. So that's when I'm going to be ready to be purchasing properties. Average first-year income will be for a realtor if someone puts in sufficient efforts. Bhupinder, what is the average income that you can make in the first year? That's really hard to say, because I've seen a lot of realtors that have come to me and come to other places, and they'll make $5,000 in their first year, or they'll make $75,000 in their first year. It really, really depends. But what is sufficient efforts? I can tell you that if you're a new realtor and you're working less than 80 hours a week, it's not sufficient. Everyone wants a magic pill here where they can come into the business and they work in it for 10 hours a week, 1 week on, 1 week off, and think that all the money is going to happen. And it's not going to happen that way. Here I am 20 years later, and I'm still doing 80 hours a week. So the idea that it's just going to come to you just doesn't happen. Stay-at-home moms in history now. What? I don't know what that means, Robbie. Trade King, thoughts on a recession? We're full on in a recession. For any of you guys who follow me, I've been saying that it's been a recession since April, that we are in a lot of trouble. Property prices are going to be continuing to drop. The governments don't want to admit what's actually happening, but it's going to be a doozy, unfortunately. I'm really afraid for what's going to be happening with the market. My thoughts and prayers go to all those people who are going to be losing their homes. At the same time, for those people who follow me and do the things that I do and be disciplined investors, I can't wait. This is going to be an amazing time for me. I'm going to be able to buy up properties for 50 cents on the dollar. It's a great time. Two incomes needed to support a home. Absolutely. I would say even 3 or 4 incomes sometimes to support a home. In Toronto, there's a guy that just won the lottery, $55 million or something. He goes, finally, I'm going to be able to afford a home in Toronto. Finally, after winning the lottery. This is the plan for anybody under 40, is they have to win the lottery in order to buy a home in Toronto. This tells you why it's so out of whack. We can't have a city where properties are 1.2 million and the average salary is 75,000. Doesn't work. What are my thoughts on buying property in Edmonton, Alberta? I like Alberta, you guys. Alberta is fantastic, very landlord friendly. Remember, I always say, look at places in Canada or the United States that are landlord friendly. Canadian banks lend on properties in the United States. So if you want to go to Tennessee, Florida, Texas, Arizona, Nevada, something like that in the Sun Belt, it's beautiful down there. Cheaper homes than in Canada because of the weather, obviously. Fantastic, very landlord friendly. Also in Canada, you can look at Saskatchewan, Alberta, New Brunswick. There's a lot of places that are very landlord friendly. So you got to keep your eye open. I like it. I like it. You guys on YouTube, if you have any questions, I'm monitoring the questions from Facebook as well. If you guys have any questions for me, if you want to know any areas that you're actually specifically looking for, I'm happy to look into that for you. Robbie, what's your idea about multi-generational living to pay down mortgages? What's my idea on having multi-generations, like having your mom and dad and grandpa? It's amazing. You should be doing that, right? And that's like house hacking, but with your most trusted family members. I mean, that's a great idea. A great idea. I love it. I also have a lot of different programs, that I follow in order to build wealth. So it's not something that I would do, but I think it's great for a lot of people. My mom lives with my sister. It's amazing. So I think for some people, it really, really works. The average, just so that you guys know, the average price in Toronto, this includes all condos, all properties in February at the peak, 1.287 million, almost 1.3 million for the average condo or home in Toronto in February. Today, the average is 1,023,000. That is a massive drop, massive, massive drop. Ironically, around 30%. Ironically, we raised the interest rate just over 3%. Remember what I told you, every percent that the interest rate goes up, we lose 10% of value. And it doesn't happen across the board. The entry-level homes don't get hit near as much as the expensive homes. So when you go look at those expensive homes that are on the market for 15 million and you see them dropping 5 million, 10 million off the price, the bigger they are, the harder they fall. All right, you guys. Again, on YouTube, you guys, we love you guys over there. You guys are sometimes a little quieter than you are over on TikTok, but it's all good. Toronto prices are losing a lot, but they're the bigger ones. So if you're not in a home that's, multi-millions, you're not going to be losing as much as those guys. But remember, the bigger people who have those homes don't always sit in those homes in a fully maxed out mortgage. They usually own the home, so it's not really going to bother them because they're into it for multi-generations. They're going to hand it down to their children's children. So for you and me, we have to know how to be nimble. Don't hang on to a house that you're losing on. Get rid of it and put your money into safer apartments. Opinion on building on the Greenbelt. I think that's crazy. One of the coolest things about Toronto is that they have this entire belt around it of forest that we're never supposed to build on. Of course, every conservative government that usually comes wants to talk about it, and now it's actually happening. I think that's a travesty. Number two is we should keep the nature environment there. It also hems in the city and prevents a sprawl as much as you would normally think. And by doing that, we restrict the amount of space that's in the inside, and it keeps your property values high. If you were one that actually really cares about your property values, you would not want anyone developing on the Greenbelt. If you're anybody that really cares about the conservation of land and so forth for animals, you wouldn't want to build on the Greenbelt. Now, I understand that there is a need, blah, 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 but like always, doesn't matter if the government is green, red, whatever color it is, there are always going to be some nefarious people that are out there trying to make a lot of money off of it. Um, Robbie Bobby, wondering what a one bedroom, a two bedroom, and a three bedroom is up and down when it comes to condos. So, you guys, the most popular properties in Toronto that are losing the least amount of money is one and two bedroom places. Uh, the best unit that you can be in right now is two bed, two bath. It's the most in demand type of unit right now that people are looking for. So, if you're in a larger unit, let's say a three bedroom, it's possible that you're not going to get the maximum amount out of that, like as far as percentage of return. Two bedrooms would be better if I was buying it today. One bedrooms were overbuilt in Toronto for many years, and there was not as many two bedrooms. So because of that, we're getting a premium on the two bedrooms. Um, we have somebody in Mississauga near Square One, rough estimates on one and two bedroom condos. Again, there's no way we could tell that. That's like saying, what is the price of a car, a one seater and a two seater car? It really depends on the year, when it was built, what is the condition, what is the building, right? Very building specific. If you want me to give you an idea, give me your postal code, the first three digits, like L4Z or something like that. Give me the first three digits and I'll tell you what's happening in that postal code right now. Yep, two bedroom is better for sure. Yes. If you want to give me your postal code, I'll help you out on that one. I need the first three digits, L4Z. Isn't that what I just said? I think you're playing games with me now. L4Z, inside of L4Z, it peaked out at 923,000 in February, and today it's at 807. So it's down $110,000. Remember that this is very, very different, right? Because the bigger properties are losing a lot, whereas those entry-level properties are probably not losing very much. Mr. Incognito, are you investing in Western Canada? So for those of you guys who know me, I invest in Eastern Canada and Western Canada and in Ontario. I also invest down in the United States, but I don't invest in the western part of the United States. Very, very good questions, you guys. But if you want to know specifically about a postal code or anything to do with real estate right now, we are seeing some crazy stuff happening in real estate. Remember, I'm not just a teacher. I actually am a working broker in Canada. And so we work all over Ontario and we do a lot of stuff. We have 4 companies now, so kind of busy. Alberta, yes, absolutely, Alberta. I don't have the T zones. I'm sorry. I have the L's and the M's. Sorry, buddy. Right, Bobby, he's telling everyone to tap it if you like it. Yeah, it gets more people in. When I first got on here just a few minutes ago, there was like 150 people here, but I guess people don't want to know all this stuff. Sorry, Mr. Incognito, I don't have T5S. So if you guys want the calculator that I use to evaluate properties, I try to look at 50 or 100 different properties in a day. I've gotten really good at it. If you want to know the investing calculator I do, I built it. Takes 100 hours to build it. You can go on the link in my profile, and it's there. It's really, really, really detailed calculator. What are my thoughts on the bank raising rates in 2023? We're most likely going to see 2 more rates. That's what it looks like. It looks like we're going to have another 0.5% and another 0.25% raise. That's what it looks like. The calculator, no, it's not free. It's $39. But you know what? I do a lot of lives on it. You can go and check out our YouTube channel. We do a lot of lives on it. You can learn how to do it and you can build it if you would like. The rates will probably go up 0.5% and 1% more. It's going to be raising quite a bit. And so you got to figure out what the bank's terminal rate is. They say the terminal rate will be 5. The bank rate will be 5. That's what they want it to get to. So that means your mortgages will be 7.5%. Woo! I mean, it's crazy. I didn't even believe that they would be able to raise the rate 0.5%. And look at where we are now. Unbelievable. I cannot believe it. So the rates are going to continue to go up, which means the prices have to get pushed down. Remember, just last year, you were getting 5x your salary. So if you made $100,000 a year, you would get $500,000 in mortgage. Today, a lot of places, you're going to go with $100,000 a year and get $100,000 mortgage. This is crazy. So for the average home in Toronto at 1.2 million, if they'll only give you 1 times your salary, what are they going to give you? you have to make $1.2 million in order to get a small townhouse. And you can't have a city that's full of people making over $1 million a year with no room for any workers. It's just not going to happen. Absolutely crazy. Yeah, Cynthia, how are you on YouTube? Good to see you, Cynthia. Yeah, it is crazy. The world has gone absolutely crazy. I cannot believe what's happening. But remember, any book that you read, any advice, they're always going to say, have some savings in the bank, have some savings in a bank. Okay, so how much do people have? They have 1 month, 3 months, 5 months, 6 months. I met one guy once who had 12 months reserve in his cash bank. Okay. So when these interest rates go to the moon like this, and people's monthly payments are $1,000 a month more, $2,000 a month more, $3,000 a month more, and then you have inflation with food and everything else, how many months do they have? 4 months, 3 months, 1 month, 6 months. Maybe that guy has 1 year. Okay, but what happens when all that time goes through? And this is what they call the lag effect, because people are burning through their savings like crazy. They're putting everything on credit cards right now. And guess what happens when it all runs out? It's like musical chairs. There's no chair left for you to sit on, and big problems. And so that's not the lag effect that happens. It's probably going to peak somewhere between February and October next year. Now, we're not sure when, obviously. Cynthia, he said, happy to see you. Happy to see you too. Thank you very much. I've been really busy for a couple weeks. We're selling a lot of properties. So, if you guys are looking to sell your properties, we try and sell your home for more money and a lot faster than any of the competition. We do that with a lot of social media push. And you're living below your means. That's amazing. And that is the key, right? If you can live off 50% of your salary, then you're doing amazing, right? And once you get into some wealthy territory, I know some people who are living on 25% of their salary, 20%. And so that's when they're actually able to put a lot into savings, investment, and get them to become financially free a lot sooner. So massive congratulations. Omran, he says, why this market is different. So why is this market different, and how bad can the crash actually be? This is way worse than 2008-9. Remember, 2008-9 was an American problem that spilled over to everyone else. Today, it's all the countries, the whole G20. Everybody was on the same WhatsApp group printing money like crazy. In 2008-9, we owed 30% of our GDP in debt. Today, we're at 130% debt to GDP. We have never seen debt loads like this. The Central Bank of Canada, for example, just had its first quarter ever of loss in its history because it cannot even make the minimum payment on its debt. Crazy. So how much worse can it be? 2008-9 could look like a joke compared to what could happen. Now, when will that happen? We don't know. Will it happen? We don't know as well, right? But the risk in this market is super high. You have properties in Oak Ridge and Aurora, looking to buy something in Sutton. What do I think? I wouldn't be buying right now unless it's a good deal. But remember what I always tell everybody. Don't fall in love with the house, fall in love with the deal. So it doesn't matter where we are in the stream of time right now. It doesn't matter that I think that we're going to have a massive correction between February and October. That's not what I'm saying. I'm always looking for deals, because if somebody gave me a good enough deal today, I would do it. And I look at markets all the time, and I see properties that are on the market for 6 months, 9 months. Do you think that guy wants to sell the property? Most likely. And so if he's willing to take a good enough price, I'm willing to buy it today regardless. Cynthia, good to see you. If you have any other questions for me, Cynthia, please shoot it out to me. Calgary is going crazy right now. Multiple offers over asking now. Maybe. But remember, we have to look at the leading indicators. So how many offers are happening is usually cash buyers or people who have a lot of money right now. The problem is now most banks are not wanting to lend, and we had all of these new rules for the Office of the Superintendent of Financial Institutions in Canada, where the banks have to hold a lot more reserves because of the potential danger that's coming. Triple what the reserves were in 2021. So now they are being very careful who they're going to lend to. So that is going to choke the market even more, as nobody can get a mortgage. Who is going to win? The people who have cash. The people who have cash. Debt to who they owe. Governments owe money to other governments. They owe it to pension funds. They owe it to individual people who are just buying bonds from the government in the States. They have treasuries, they owe money to everybody. Everybody owes everybody, and everyone's broke. The BC and Ontario plate is full. All Canada money is pouring into Alberta right now. I wouldn't say all. There's a ton of money coming into Ontario. Where are the reserves coming from? Deposits. Yes. Yeah. Deposits. They have to hold a lot of cash in the bank now because the central banks and the central governments of Canada are warning of massive financial contagion and to prevent a massive drop in the market. Because of that, they're forcing the banks to have high reserves, triple what it was last year. So now the bank has to hold on all that money and they're not allowed to lend it out. So they will only lend it out to AAA plus, underline, highlight, exclamation mark, like perfect credit are the only people that are going to get mortgages. Everyone forgets that in 2010, 11, I'm dating myself because I'm from back there, right? But back in those days, everyone thought, oh, I would have went and bought homes in 2009, 10 when they were so cheap. And everybody I talk to says, I'm just going to wait until the market crashes and then I'm going to buy. What you fail to remember is back then, the banks wouldn't lend to anybody. Nobody. You had to have cash to buy because the banks were so scared to lend to anybody. So that's what's going to happen. We're already seeing it. I told you earlier, my friend there had $250,000 mortgage is what he wanted, and they wanted $1 million collateral. And he had credit over 800, perfect credit. And they would not lend him $250,000 unless they had $1 million of collateral. Unbelievable. Hey, Robbie Bobby, thank you very much for always encouraging everyone to tap. If you guys like this stuff, please tap away. A week and a half ago, the last time I was on here, I think I had like 3,000 likes. So you guys are really dropping behind, man. I guess I'm not providing any value to you whatsoever. Cynthia, over on YouTube, what do you think of the China, Russia, Brazil new currency, the BRICS currency? So it's no longer called BRICS. BRICS was Brazil, Russia, India, China, and South Africa. But now we see Egypt, Saudi Arabia. There's a bunch of other countries that are applying to get into BRICS, and they want to have a dollar backed up by a commodity like gold, copper, oil, instead of just having it based on debt like we do in Canada and the United States. It's an amazing idea to me. I love the fact that money can possibly be very stable. That's a good thing. But we also have to think of what that world would entail. So if the United States, and I'm not American, right? But if the United States loses half their power, half the benefits of globalization go away. And so that's a lot of benefits to Canada as well, a lot of benefits to Europe. So the remaining countries outside of the BRICS countries like Europe and North America, they're going to have to suffer a lower quality of life for the next 30 years because of that. So I always tell people, careful what you wish for. What do I think about garden houses and 4 units per house, Cynthia? I think that's awesome. I think it's great for investors, right? So we're passing new legislation in Toronto to try and address our housing concerns. So if you have an individual home, you can slice and dice it, maybe even have rooming houses where you can rent out rooms, put multiple units inside of it, put garden suites like a house in the backyard. They're going to be allowing all kinds of different stuff. Now, it is very good for housing. It also is very bad for parking because there's no parking for anybody. Everyone has to have street parking. So it is always a give and take. But overall, I really like it. Gives more options for investors. Instead of getting hung up for 4 or 5 years in paperwork trying to get legally put your apartment building, your house into 3 units, now it's just rubber stamped. You just do it. But I really like it. Garden suites, laneway homes. I like it because it gives more options for our investors, more places for people to live. Robbie Bobby over on TikTok, you're saying Canada has some of the largest natural resources in the world, and you are correct. But we don't have a lot of the oil that we need, and we don't have the refiners that we need. Remember, oil can be sweet and sour. It can be acidic and non-acidic. So all of those different oils are used to make different products. And Canada only has the crappy oil. That's very sulfuric. And so we don't have the oil that we need in order to survive as an economy. We still need to bring it in, number one. Number two, the refiners and all the mines and so forth. A lot of these mines take 10, 15 years to build out and billions of dollars to do so, same as it is for production plants. So as China and all these other countries no longer want to make anything for Canada and the United States anymore, we're going to have to rebuild it all here as if we're starting from scratch, like pioneers on a horseback. We got to figure it all out. But that could take 20, 30 years for us to build it all. So there will be a massive lull if this happens. You think tradespeople will be super happy, eh, Cynthia? Yeah, absolutely. There's going to be, if we split all these properties into 3plexes, 4plexes, garden houses, laneway homes, all this, we're talking about massive generational thing here. We're going to be able to have homes for hundreds of thousands of people, and every trade worker on the planet is going to be invited for that. I have friends that have gone down and chased hurricanes to go down in construction and go rebuild. They made a lot of money by doing that and being very free, but it's obviously before they had kids. So that is really, really good for all of them. I think they're going to be very, very happy with that. In addition to that, we're seeing commercial properties like we've never seen before getting converted. If you notice in the news in New York, they just announced $1.5 billion from one company to transform offices and put them into residential properties, which is incredible. So, they just have to build all the walls, put new plumbing and so forth, and split all the offices up into individual units. Absolutely incredible idea. I love it. All right, you guys. So if they do that, that's going to happen in Toronto, as same as New York. It's going to happen all over the place, So I suggest that you guys pay attention to that. There's opportunities to make a lot of money because you're going to see this stuff continue over and over and over. Gold or in cash? Omran, that's a good question. Remember, I'm not a financial advisor, but I got to tell you for myself, you need both. You always need both. So you have to have some gold and silver. What do people say? It's up to you. Normally they will suggest somewhere between 5 and 20% of your portfolio in gold and silver bullion. Remember, never store it in your home. Also, you should have a couple months worth of cash because as we see, like in Nigeria, they're banning a lot of the withdrawals from the banks, and you don't want to get pinched in that. You need to have some cash to survive. Yes. But if you're going to have an excess amount of cash hanging around, I would tell you should have it in like T-bills, short-term T-bills or something like that. At least you're gaining some percent back. That's what's considered the risk-free rate. But remember, I'm not a financial advisor, but I could just tell you what I do for myself. All right, good questions, you guys. Do you have any other questions as far as real estate? I mean, real estate is doing really, really good. I'm really happy. We're selling homes like crazy right now. I don't know what you guys are seeing, but people are selling their homes because they cannot pay for their mortgage. So we were talking to this one guy. The one guy, his payments are at $15,000 a month. Can you believe that? Unbelievable. I've never seen anything like that before. Manny, how are you, buddy? Good to see you. I saw your message there that you were missing my live, so I tried to come on today. I wanted you guys to feel that I haven't disappeared off the face of the earth. Been working a lot, man. I mean, we are selling homes like crazy. I've never seen this kind of demand that's out there. For you guys that don't know, I'm a realtor. I'm a broker in Toronto, and we operate all over the place, but we also are consultants and advisors to people all across Canada and the United States. So we help build businesses for them. But man, it has been very, very, very busy. And man, the banks, the central banks are keeping us on our toes. They are raising rates continually. But remember, cap rates follow the interest rate. So if the interest rate goes up 1%, cap rates are expected to go up 1%. So for investors who are looking at properties, they're watching this chasing cap rate, chasing it upward. Remember, over the past 2 years, we were looking at cap rate compression. So cap rate is the percent of money that we're expecting to make off the investment. As the interest rates were dropping, and the central bank rate was setting at 0, people were accepting 3% cap rates. There's no way that in a market today where we're having mortgages at 6 and 7%, that somebody would accept a 3% cap rate. they're now going to be wanting an 8, 9, 10% cap rate. You're buying more gold from Kitco. Manny, good job, man. Manny, we were just talking to somebody earlier today, and they were just mentioning that they got ripped off by a gold and silver shop, asking me what to do about it. And here's my advice to everybody. If you're going to go buy gold and silver, you need to go with somebody that you can trust, that always has accurate stuff. There's a lot of fake gold and silver that's going around. You can buy a fake gold bar for $5 and sell it to someone who doesn't know for $2,500. So go somewhere where it's trustworthy. So happy to see that you're getting more. Great, man. PP Toronto, you're telling me that real estate is going to go down more? Absolutely. Remember, we're always looking at the lag effect. Whenever the interest rate goes up, it takes 12 to 18 months for that interest rate to take effect. So if we're looking right now at that they just raised rates 0.5%, we got to wait 18 months for the full effect of that to happen. Christine, good question. How much do you have to earn? How much do you have to earn yearly to qualify for a mortgage? Here is an easy way to understand it. Today, you're probably going to get around 2 times your salary. That's what you're going to get. Last year, we were getting 4 times your salary, 5 times your salary. Today, we're getting 2 or 3 times your salary because interest rates are so high. What would be the top 3 places to invest in Ontario? You guys, we cannot give you a place because I always tell you, you got to fall in love with the deal, not falling in love with the town. I can buy amazing deals in Toronto, and there could be bad deals in Toronto and any other city that we can choose from. And it really depends what your whole timeline is, your 10, 15-year timeline. Because in that 10, 15-year timeline, you may have it to buy and sell. Maybe you're only here for a short amount of time. Maybe you want to put it in a trust or a holding company, completely different strategy. So I couldn't tell you that. Robbie Bobby, thanks, buddy. Bounce like a ball and tap the screen. Tell everybody that you like this. It really helps out the algorithm. If you guys click the button on TikTok, it helps let people know that you actually like it and I'm giving you some value. So thank you very much. Manny, you're always a big fan. Thank you so much. Listen, guys, this advice that I'm giving you is just because I've done it. I've done this for over 20 years, and you'll see patterns happening over and over again. So when something happens to you today, you should inherently be looking at the past to see when the last time something like that happened. And this event that we're in today has nothing to do with how 2009 played out. 2009 was a subprime ninja loan problem that they had, and they had too much inventory. Today, we have no inventory and a lot of debt, and we didn't have a lot of debt in 2009. Completely different. Our problems we are facing today are like the 40s. So if you're not up to date on how we dealt with the problems in the 40s, how we dealt with the problems in the 70s, if you don't understand those two situations, then you won't make it through this one. What is the minimum needed to get started on your first property? That depends. If you're buying it for an investment, you need 20% down. If you're buying it for yourself, 5% down if it's under 500,000. So if you're starting off in your first property, yeah, I would start small. So if you're going to buy a $500,000 unit with 5% down, that's $25,000. That's what you need. Cynthia Carolina, if you have any questions over on YouTube, man, thanks very much for coming by. We really appreciate it. If you guys have any questions about a certain area, certain postal code, I'm happy to help you out with that as well. If you're interested, do you guys want to look at some properties, or do you have some more questions for me about real estate right now? So what I do, you guys, I have a lot of different companies. I have holding companies. We're going to be opening a trust. I have a lot of different strategies on how to make it through this. I've been telling people for a couple months now, we're filming all the time to make a master course, but you're going to have to dedicate some time to it. It'll take you 20, 30 hours to get through it. Christine, you're looking in Niagara. Yeah, beautiful place. Niagara properties are really good as far as price points go. Drew, you're saying you have $300,000. What do you do with it? Remember, I'm not a real estate. I'm a real estate guy. I am not a certified financial planner, but I could just tell you for what I do. I don't look at how much money to put anywhere. I divide all of my portfolios into percentages. So, normally people tell you to put into gold and silver somewhere between 5 and 20%. So, be somewhere in the middle, 10, 15% in gold and silver bullion. Never keep it in your own home. Have some cash, have also some reserves around your property, things that you're going to need. And also you should be always buying cash flowing assets somewhere. Remember, cash flowing is not just the result of what's after the rent. It can also be what you're going to be getting back to yourself as far as cash flow, as far as value adds, as far as pet rents, as far as laundry, as far as principal pay down, appreciation and depreciation, all your tax benefits. You kind of got to mush them all together. If you guys haven't seen my investment calculator that I created, I'm the only one that has it from what I know. We're the ones that built it. You can get the link in my bio, or you can go to my website at Rough Team Realty, and it's there, $39, but it would take you a couple hundred hours to build it. Man, you guys, yeah, good questions today. If you guys want to know some properties, you can let me know. What I need from you is the first 3 digits of your postal code, and then I can help you out and figure out where the properties are. Cynthia, do you have any questions for me over on YouTube? If you do, man, haven't forgotten about you. If you guys like this, double tap the screen and tell me that I'm helping you out. I would like to know if I am helping you out. This isn't how I'd like to spend my Sunday nights if I'm not helping you out at all. But let's try to change the screen around, and I'm going to share it with you if you're interested, the different types of properties that are out there, and then you could let me know if there's a postal code that you're interested in. Okay. If anybody wants to know, what we can do on these ones is we can pull up a certain postal code. If you pull up a postal code, now again, this is in the Greater Toronto area. If you pull up a postal code, what we can do is we can find out exactly what the prices are and how long it's taking to sell a unit like that. So if you go check this out, in the past 12 months, you can see up here on the corner, it is down 23%. But from its peak, 1.1 million, all the way down to $806,000. So it has dropped quite a lot. So it's actually way more than the 23%, which is there. So this is where we're watching properties drop a lot in value. So you're looking for L6Y, for example, L6Y. We'll type that in, and let's see what we come up with that. So L6Y in the past 12 months, you can notice over here, it's down 20% over the year, but that only starts at 1.2. Obviously, it peaked at 1.4 over here. So the drop from 1.4 down to a million is even greater, right? So this property is down over 20%. So this is good. This is for Elias over on YouTube. Thanks, buddy. Do you think there's another rate increase in January? Most likely, if we're looking at all of the banks and all of the guidance that we're getting, they're talking about a terminal rate. So a terminal rate is the central bank rate where they're going to peak out, and they're talking about 5%. So 5%, which means your mortgage would be 7.5%. What would that leave us? We're probably going to have another 0.5% and another 0.25% before the banks pause. That's what they're saying. So it wouldn't surprise me if we have, even if they put another quarter, there might be another couple quarters after that. But that's where I think they're going to stop, is 5% terminal rate, which is what they're telling us. Hopefully that helped. But thank you very much, Elias, over on YouTube. If you guys have any other questions, I'm sorry to Baron, I don't have the N region. This is for the L postal codes and the M postal codes. But what this has is it also shows you how long it takes to sell a property. So if we look at this, this is also going to be, let's just see, this is for the L6Y zone. This is exactly what we would be expecting. Back in February, it would only take you 7 days to sell your property. But today, it'll take you 22 days to sell your property. A lot longer. And this is because, everything is sitting on the market, tons and tons of properties on the market, which is brutal, right? This is what my company does, is we try to sell your home for more money in less time. So when we look at this and we see it hitting 22 days on the market, well, we want to sell it in 7. So we do this by massive amount of marketing, hitting somewhere between 750,000 and 1 million people in the first couple of days on the market to try to get it sold. Nice guy. I'm sorry, we don't have the K regions. This stuff has my L's and it has M's. I don't have the K's. I'm sorry about that. This is also a Toronto one, but just to be easy on everybody, look at this in Toronto. This is all Toronto, covering many, many millions of properties. Look at this. Back in January, selling in 9 days on the market. Today, averages 24 days on market. This actually doesn't matter if you're in Ottawa, Montreal. It doesn't matter. All properties, as interest rate goes up, so does the days on market. That's just what happens. As interest rate goes up, we'll see prices just dropping. If we look at Toronto as a whole in the past year, we just see prices going down, 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 bammo. So they've gone down a lot, and we expect them to actually go down quite a bit more. Christine, L3C, let's take the look for you. We should have the L. I don't have the tangos, nice guy. I'm sorry. L3C. But if you guys, so I am a broker that lives in Toronto, but this will tell you a lot about what's happening in the whole country, I think, because it's such a big area. So look at this. Not a lot of property selling in L3C. 1.9 million down to 660. So you know right away that that's something that's wrong. There's not a lot of properties selling in L3C. So how we can figure that part out is if I go here and check this out, we'll see this is how many homes have sold in the past 12 months in your postal code of L3C. Look at this, you guys. 3 units sold. Only 3 units of sold in the past 12 months in L3C. That is crazy, right? So not very many. So that's been staying pretty steady, that one. I'm surprised. High density, YIU or ICI interest rated first quarter. I expect them to go up quite a bit. I got Elias. How are you, buddy? Over on YouTube. L5N is what you're looking for. I got you, buddy. L5N. L5N. Let's take a look at L5N. I'll also show you the days on market if you're interested. What we want to know, days on market for L5N, for example, we can see that properties were at 1.5 days on market in the spring. Look at where they are right now, 22 days on market, right on trend with all of Toronto. What are the prices right now? Prices peaked out at 1.26 million back in March. Today, $1,050,000 has dropped quite a bit. Woo! And now if we want to know how long are things staying on the market, they're staying on a long time. Now, what is sales to asking ratio? Look at this. Back in February, people were getting 120% of what they were asking. That means if they asked $1 million for the property, they'd sell for 1.2 million. Today, they're selling it at 97%. Now that's all L5N. So they're getting below asking. So this is important to know when we're going to go and be looking at how much a property should be listed at. This is very important. Nice guy. You said you're driving, buddy. Yeah, be safe, dude. If you're driving out there, I want you to be safe. All right, you guys. So this is pretty cool stuff, right? I think it's pretty cool. I hope that this is giving you a lot of value. If you guys have any questions for me, always remember you could reach out to me anytime at contact@Rough Team Realty. Contact@Rough Team Realty. If you want to go to my website, if you guys have time and you're interested in that investment calculator, it's right up here in the corner. Where you can go into this investment property calculator. Now, you get lifetime access with this. It is an instant download, and we have the Canadian version and the American version. American guys get it for the same price as Canadian. It's all in Canadian dollars. So that's pretty cool if you guys are interested in it. That's it for me. Are banks reducing LV due to rate increase? Absolutely, they're reducing that. Big time, nice guy. So that's a good question. He's asking, like, are we reducing the loan to value? And the answer is absolutely. Absolutely, we are. So what does that mean, loan to value? It means that last year we were going to be able to get properties at 5% down, 20% down if it's an investment. Today, we're getting properties that they want 40% down, 50, 60% down. It's almost like we're in commercial again. In commercial world, for all the you guys who don't know, you have to put a lot more down. So in the commercial world, 40% down is pretty common. It's only in residential that you get these big breaks where you can put 5% down. That just doesn't happen in commercial. Cool. Any other questions when it comes to surviving this recession? I want you guys to do well and give me a call, because there's going to be a time that you should be considering selling your property. And I want to be that guy for you. Woo! I'm knocking down all my lights just so I can move all my cameras around for you guys. My studio is pretty jammed with lights, you guys. What is the down payment required for commercial? Commercial is normally 40%. But it really depends what kind of commercial, right? And it depends what you're renting it for. So when you're renting a commercial property, you have to put more down, bigger loan to value, but you never have to do any of the repairs usually if you have a triple net lease. So when I have a commercial property, we're going to triple net lease it, which means the tenant is going to go and pay for their own repairs. They'll do the repairs. They pay the taxes and insurance. Is it getting better soon? This is for Inspect 2020. I'm guessing what you mean is that the rates are getting better soon. And no, they're not going to be getting better soon. It's going to take some time. The first time, we've already seen the beginning of the Fed pivot. Remember, there's 3 stages to a Fed pivot, meaning actually rates going down. The first step is that they're going to stop putting monster raises. And we've already seen that. The raises are already getting smaller. That's the first step. Second step is where they don't raise anymore. Third step is where they start reducing. So there's 3 stages to the Fed pivot. Smaller increase, pause, decrease. So the decrease, what everybody's waiting for, that's probably not going to happen until next summer, next fall. But again, nothing too surprising. We have so much debt and the market is very precarious. It can happen before that. Absolutely. Line of credits are reducing. Absolutely. For sure. Lines of credit are going down and banks aren't even telling you. You're just going to get your statement in the mail and the line of credit says, hey, by the way, it's half of what it was before, because the bank is not comfortable putting out that much credit to you anymore. Crazy, right? Your lines of credit, same as your mortgages, have doubled in interest rate, and that changes all the risk tolerances of the bank. What is the vacancy rate for residential and commercial? Really, really depends, man. Every area is different. Every area is different. Banks are scared, and guess what? They should be. We have a fractional bank reserve, remember. So think about this risk. For every $1,000 you put in a bank, the bank is allowed to lend out $9,000. What? So I put $1,000 in the bank, and they can lend $9,000 out? Yeah. Crazy. So they have so much risk. So no wonder that the big banks, the Office of the Superintendent of Financial Institutions of Canada, OSFI, they now said this year the banks have to hold triple the amount of reserves just in case of financial contagion. This is happening, whether we like it or not. It's really sad. 4101, man, that's very, very precise, man. Blue Jays way value. You got to give me the postal code of that, and I'll punch it in for you. GTA, what is the vacancy rate for residential and commercial? For the first time ever, I think that the residential rate, the vacancy rate, is less than commercial. Commercial has a greater vacancy rate right now, sitting at like 15%, whereas residential is sitting at like 1.5%. And normally it's the inverse. Normally there's a lot more residences that are empty and commercial is jammed. But this is what happened during the pandemic. A lot of crazy stuff happened. during the pandemic, all these companies shut down left, right, and center, right? So commercial is really, really rough right now. But if you wanted to make your jump into commercial, it's a great time to do so. Remember, though, commercial can mean a lot of different things as well. Commercial can be if you have a Subway or a dentist office, small, or if it has the office and a warehouse in the back, or the giant warehouses that are massive, all different, right? If you're down near the waterfront, it's very different if you're way north up in Vaughan. So it is so like specific, local. You guys on YouTube and Facebook, if you have any questions for me, and if you want me to look up any zones here, different postal codes, I'm happy to help you out if you want. Did I see Mr. McLean say, don't worry that the rates will stay low for years to come? Yeah. Mr. Tiff there, he said, I remember in 2020, don't worry, you guys, that the rates are going to be low. If you want to go and invest in your business, buy a home, it's not going to raise up forever. Guess what the state said? They said, we're not even thinking about raising rates. And now look, it's like a rug pull. It's like everyone was being gaslighters, gaslit you. Unbelievable that this is happening. But they saw it happening. So that's why, I don't go down the road of conspiracy theory because I'm giving them too much credit. I just think that nobody in these types of jobs are competent enough for the jobs. And it's very, very political. The medicine that everyone has to hear is we got to spend less and save more. But that is not going to be a political party that wins in any country. Nobody wants to eat their own medicine. Thoughts on the rent market? Rent market is doing fantastic. Rents are going up almost everywhere in every jurisdiction of the Greater Toronto area and across the country. Our properties were raising rents because we have to. Raising rents is not just because the evil landlord is doing so. We are getting also as landlords a letter in the mail, higher insurance, a letter in the mail, higher taxes, a letter in the mail, higher for everything. Property management fees, higher repairs, higher everything. And so landlords are getting hammered on top of the higher interest rate. So yeah, rents have to go up everywhere. And they have been. Very, very cool live, you guys. Today we got some good questions out of the way. I think that we did pretty good. We've been on here for an hour, been doing it. So Inspector 2020, you said they want to squeeze everyone. And can I ask you a question? I'm genuine. Who do you mean they? I'm genuinely curious. Who is they? So, it really depends because sometimes we have renters on here and they go, oh, it's the landlord's fault. And then from a landlord's perspective, when everybody is raising the prices on them, what are they supposed to do? They have to raise rents as well, right? And so they're going to do that. Inspect 2020, you're saying that the government, is trying to squeeze everybody, and you are correct, my friend. You are very, very correct. Now, here's the crazy part. Democracy sounds like a wonderful thing, and I'm not knocking it. Like democracy is amazing. If we had free market capitalism, and I have to put that caveat in there, free market capitalism changes everything, not capitalism. What we live in is this we call it capitalism, but it's very centrally controlled, which isn't capitalism. And so we now have this ability to buy a lot of votes. This doesn't matter if you're from the country that my wife is from the Netherlands. It doesn't matter if you're England. It doesn't matter if you're Germany, Switzerland, Canada, United States, blah, blah, blah. They're all the same. The governments need a lot of cash in order to win the election. But they do so by giving out a lot of money to different places, and they have to take money in their polls in order to get elected. All that money is an investment from the companies, and they got to pay that money back. And so whenever they give you $1 million to get elected and you win, well, now they want a $5 million, $10 million contract to make all their money back. We've been stuck in this cycle now for a couple hundred years. And as it goes on, we get more and more debt on everybody. And so it's just kind of like a self-fulfilling prophecy, and happens over and over and over again for hundreds and hundreds and hundreds of years. So if you want to understand where you are in the cycle of time, please look at that book by Ray Dalio, How to Deal with the Changing World Order. When you see these crazy things happening, you have to intuitively look into the past, into the last time this happened. The last time that happened was probably in the 40s. So I'd tell you to pay attention to that stuff. TJ, how are you, buddy? Yeah, good. Yeah, I'm all good. Thank you very much for coming on, you guys. Appreciate it. You love it that there are guys like me that just speak the truth. Yeah, it's not popular, to be honest with you. If you were online here and I was getting kicked in the balls or something and face, getting punched or telling jokes, crazy. Sometimes I see people on here, like 6,000 people watching somebody eat a chocolate bar. But I actually want to help people. And, but I get it. Life is stressful. You shouldn't have to come on at night and be stressed out too. So I get it. Everyone wants an escape, right? But thank you very much for the compliment. I do, to my own detriment, probably. I speak too much of the truth. Are lenders using appraised value or market value? Lenders only use appraised value. But lenders use appraised value or purchase price, whichever is lower. That's what they use. So if you're going to buy a property and say you're going to buy it at an amazing deal, okay, and you're like, I'm buying the home for $150,000, but I know that the home is worth $250,000. I know the market. You bought it for $150,000. You're only going to get a loan on 80% of the $150,000. They don't care what the market value is. It's market value or appraised value, right? Appraised value, which is usually close to market value. Appraised value from the bank appraiser or purchase price, whichever is lower. Great. All right, you guys. I got some more work to do tonight, so I got to get running. But thank you very much for coming on. I got a lot of you loyal supporters who have been on here for like a year with me. So thank you so much, Elias and Cynthia over on YouTube, our Facebook guys. Thank you so much for coming on tonight too. TikTok, you guys are always there, giving me lots of likes, so I appreciate it. If you guys want to follow me, Rough Team Realty, go to my website or follow me on any of the other channels. We're really trying to push YouTube, so if you can follow me on YouTube, I'd like that. Any other questions when it comes to any investing, surviving the recession, anything to do with real estate? Real estate has been going crazy, and I mean crazy like down. So you got to be careful with that, guys. Please be very, very careful. So let's pull up the average price in Toronto just so you guys know. Yeah. Down 10%, 1.26 million in Toronto, down to an average of $1.05 million. Crazy. If I was buying in the GTA, this is what TJ is asking me. TJ, if he's telling me, I know you don't have a crystal ball, but when do you think would be a good time to invest in the GTA? I always say fall in love with the deal. Don't fall in love with the property. So I want to look at deals all the time. So what I do is I'm looking at a percentage, a cap rate. So just to be easy, if a property is 100,000, let's just use Toronto, like $1 million, and it makes $10,000 a year in rent off of it, that's 1%. Yeah. So you got to figure out how many percent is that. Look at the percentage spread between the total rent and the total purchase price. So that's what I'm always looking at. I'm looking for percentages. If you own that calculator that I use, the investment calculator, which you can get by going right to the link in my bio here, it's $39, but it cost me thousands and thousands and thousands to build it. So I think $39 is a good deal. But if you're doing that and looking at a lot of deals and being laser focused on the percentage that you make, then it's always a good time to buy. If we're talking in general, though, we're going to have a terrible Q4, and the markets are not going to like it when those reports come out in January and February. So somewhere between February and October next year, we're going to see a massive rout, I think. So in general, you have to be buying during a massive crash into the mud. But in that crash, remember, payments will not have gone down. Payments are going to be high because the interest rate's high. If you're a cash buyer, that's where you're really going to win. But I expect to see a very, very, very bad 2023. Is dual agency used for ICI? I don't know what ICI is. EC, like in French, here? Is that what you mean? The trend is my friend. When will the trend change? the trend for the interest rate hikes has already changed. The trend for plateauing of rates will probably happen January, February, March. The decrease in rates will probably, that trend will probably start in Q1 or Q2. And prices will probably be bottoming out after that. Remember, it's a lag effect, probably in the summer. Best 1 year rate for 1 year fixed? I don't know. I don't know what the rates are right now for 1 year fixed. Not really sure. Nice guy. GTA have land transfer tax? Yes, it does. But the downtown core of Toronto, so downtown Toronto, you have 2 land transfer taxes, but the rest of Ontario just has the Ontario tax. But not the whole GTA has the 2 taxes, just inside the center of it. Nice guy. You're saying, okay, hang on a second. So industrial, commercial, institutional. That's what you're talking about. So dual agency, meaning does one agency represent both sides? They can. I'm talking from a real estate brokerage perspective. Nice guy. There are a lot of calculators that are out there when it comes to the Greater Toronto Area taxes. And so you can put, if you're in Toronto or the GTA, just put it in the calculator and it will give you the percentages of what it is. TJ is asking, good question. If people can't close on their pre-construction, do builders usually just take the deposit and settle, or sue for more? And all of the above. So all of these people in pre-construction are hemorrhaging, like hemorrhaging on the hospital bed, really, really bad. And so some, they're not getting their money back, or there's going to be a delay. There's going to be tons of court cases on it. There's a lot of builders who are just pausing. There's other builders that are trying to charge more. They're trying everything they can. And pre-construction prices are coming way down. I am getting emails daily offering me double my commission, triple my commission. Some cases, one case was 6 times the commission in order to try to sell it, because the prices, they need to have them sold. And imagine, in all of Toronto, in the month of October, only 40 homes sold and 200 condos. We're used to seeing thousands and thousands and thousands sell every month, and they're not selling anything. Unbelievable. Do I think bank withdrawal limits will happen in Canada? Most likely. They're happening in countries all over the place. Just because Canada, United States, whatever, we're a little bit farther down the curve does not mean that it will not happen here. I think it's going to happen for sure. Now, I've already run into this, you guys, because you try to go to the bank right now and withdraw $5,000. They're like, nope, you can't do it. You need to order it. Wait 3 days for it. If I have to pull out $10,000, now I have to order it a week and a half in advance. If you want to take out $100,000 in cash, you got to wait a month. You got to fill out paperwork, IDs like crazy. So we already are in where the banks are limiting what you can take out, limiting how much you can take at all times, because they want to prevent bank runs. And if there is a bank run in Canada or the States where everyone's going to get cash out of the bank, say like a bad situation comes up, the banks will be forced to lock all those ATMs and not let anyone out. That's why I always tell you, you should have some cash. Brampton had a protest of buyers asking Paradise Homes to lower prices on already purchased homes. Yeah, they're not going to do that. They're not going to lower the prices if they can't. Nice guy. Do I support Ryan Serhant courses? Ryan Serhant, like, the guy is awesome. I've never seen any of his courses. I don't know anything about his courses. I've never taken them. A lot of what he has, though, is very good for everybody. There is a chunk of it that is good for only America, right? Not for the United States. So I don't know where you are, but I've never taken any of his courses, so I can't really say. But the guy is one of the best in the world. So your guess is as good as mine. My guess is they're pretty damn good. I don't know. All right, you guys. Thank you so much for coming on tonight. I hope that I gave you some value. Did I help you guys out at all? If you're thinking of selling your properties, please give me a call. Please go to my website, or if you have want to email me at contact@Rough Team Realty. That's what I do. I'm a full-time real estate broker in Toronto. If you want any help with your memberships to open companies and so forth, we also act as advisors and counselors across North America. So you can always reach out to us for that as well. Omran, have a good night. Yeah, thanks, buddy. Glad that I helped you out. When do I think the market will get better? The market's going to be on a slide, and it's going to be on a slide for a while. So it's probably going to continue on a downward until next fall. But you have to also remember, how long does it take to recover to where we were last time? When 2009 happened, it took 6 years to recover. So how long is it going to take to recover here? In this case, this has infinitely more risk. So it could be more than 6 years to regain the highs that we had before. All of this depends, though, on the interest rate and how much money the government will be printing. If the government continues to print 15-20% a year like they have over the past 2 years and create more financial contagion, then who knows? Gloves are off. But the likelihood is between quantitative tightening or quantitative easing, meaning lower rates and print money, they'll probably print as much money as there is trees on the planet. And that's what's happened every other time in history. So my guess is they're going to do exactly what every other government has done for thousands of years. Which bank is it safe to keep your money in? You guys, you got to think about diversifying your money. Never keep too much in one bank. Remember, just don't have it above the national guaranteed guidelines, and consider putting some in alternate assets like gold and silver. Also, maybe putting it into a co-op bank. But, you know, RBC is fine as long as you just don't put it over like the 250,000. All right, guys, YouTube, Instagram, Facebook. Thank you guys very much for coming on. TikTok, you guys are always very supportive. Hope that you have a fantastic time. If you're ever thinking about selling your property, this is what we do: is we sell your property for more money, and we do it faster than any of the competition. You can reach out, click the link in my bio, and send me a message. We're always here to help you out. How long does it take to get a $14,000 bank draft? And is there a wait time? No, you can walk in and get it immediately at the bank. Costs you $10. It'll take you 20 minutes. TJ, you're very welcome, buddy. Thanks so much for coming on. Thanks for all your support, you guys, very much. If you're interested in that investment calculator, go to my website, Rough Team Realty. It's right there. Or you can click the link in my bio right here. Contact@Rough Team Realty is my email. Contact@Rough Team Realty if you want. I'll try to get back to you as soon as I can. Thank you, everybody on here. Thank you. You're telling me, thanks, brother. Many blessings. I appreciate it. Thanks, everybody. I hope you have a fantastic night. Keep on crushing it. And I hope that you stay safe. It's a crazy world out there. Thank you, Cynthia and Elias, for coming on over on YouTube.